Hi there, class. It's Phil McDowell, the Mortgage Professor, brought to you by Mortgage Alliance. Mortgage is marvelous. February the 14th, CTV News Calgary had a segment that dealt with mortgage credit insurance. What it was all about was an individual who had bought a policy that was intended to protect her and her home in the event of an illness. Now, I don't have the specific circumstances of this particular individual and what happened when they went to their branch and got this insurance coverage that they got. Now, the insurance coverage that they got isn't helping them keep their home. And that's because of the kind of insurance and the kind of illness she has. So let's take a look at the two different insurances. One is a disability insurance. Now, this can cover sickness and injury, but there's a limitation to this disability insurance, and that is it has a limited protection in terms of how long it's going to protect you. Because with this particular policy, there was up to 12 months worth of payments that could be made if coverage was qualified. After the 12 months, it was a bit of a guessing game, because in order to have the next 12 months, you had to take on any job that you were qualified or educated for. Didn't specify at the same salary or the work conditions. So for most people looking at it saying, okay, well, reasonable expectation is I'm going to get 12 payments made with this kind of coverage. Now, on the other hand, critical illness will cover the whole mortgage balance. So there's about a 17 times benefit if you can get the claim processed and approved under critical illness. And the premium difference is less than 4 times what disability insurance is for this individual. So let's take a look at a gamble. The gamble is I pay about 4 times the premium, but my potential payoff is 17 times more. Not a bad bet. And when we take a look at critical illness coverage, it really has some decent sizzle to it. And when I say sizzle, this will pay off your mortgage in the event of having heart attack, stroke, cancer, and some other things. But those first 3, heart, stroke, and cancer, well, if you take a look at StatsCan, their 07 figures says mortality, death, is about 57% of all the deaths in Canada as a result. So when you take a look at it, it's not a bad bet. But you really want to make this a betting game. I know insurance is sort of perverse, where you're paying out money hoping something won't happen, and it's being received by a company that is taking the money in, hoping they don't have to pay. So, yeah, it is a goofy operation. But take a hard look at the booklets, at the policy, and find out what is excluded to see if it's worth your while. Because in this particular instance, I'm sure, not having been there, but part of the decision that anyone makes is, in this case, this individual, because of their age, would have increased their payments by 12% had they taken both the critical illness and the disability insurance. So they may have weighed the two and said, which one do I bet on? In this case, they lost the bet. So my recommendation is, take a look at what you're getting into, read the policies, understand what they are, and understand that it is a bet that you don't want to win, but when it comes to those mortgage payments, it's a hard bet to lose too. Watch your money.